Morning, trade pros. Welcome to Morning Market Update for this Friday, August the 14th. I hope you guys are having a great day. William C. Willie boy, see you on YouTube as well. You're everywhere, Will. YouTube, the gram. But welcome, guys. It is a Friday, and it is a beautiful day shaping up here in Toronto. Let's get started. We got quite a few things to talk about in today's session, including the latest figures out of retail sales, what drove the market down overnight, and the Fed and digital currency. So let's get into it. So Fed Governor Lyle Brainard, she was speaking and mentioned that she gave us some updates yesterday on an ongoing experiment with the Federal Reserve Central Bank digital currencies, CBDCs. All right. They say, or she says, along with the Fed Governor Daly, she also confirmed this, that they're conducting in-house experiments for the last few years through means that includes the board's technology lab, the BTL, and Fed application developers in a collaboration with MIT. They're exploring, in quotes, the implications of digital currencies on the payments ecosystem, monetary policy, financial stability, banking and legal tender status, and consumer protection. So, look, when cryptocurrencies came out, everybody laughed and thought it'd be nuts. Then they denied it, and now they're accepting it. However, there's one thing that's important to notice here. Even though the Fed their own version of a digital currency, I've said this a long time. I love the idea of cryptocurrencies. I have a technology background. I was an electromechanical engineering technology when I dropped out and went into finance. I loved it. It wasn't really for me. I just wanted to exercise my business in capitalism, if you will. Doing electronics, and I wanted to, in the career, I wanted to build medical surgery robots development. That was kind of a passion I had. And then I was like, you know what? My passion was elsewhere at the same time. Right. So anywho, I have a technology background, and so I like it. To me, like, to the techie side, it appeals the concept of a crypto and a digital currency. However, I've always said this, the most important value of Bitcoin and all these other crypto markets is the technology, and the technology is free. Anyone could adopt it and translate the technology into their own payment system, etc. So even though the Fed is doing this, I don't know how it really impacts markets abroad. I mean, Bitcoin's up 3% this morning, but it's up to the high 11,000s. And so it's interesting the Fed is saying this, because what a better way to print money and put it in somebody's bank account than a digital payment system. And I think this is what the Fed is gearing up to do in the future, to provide stimulus directly on the individual level. Because when the U.S. government made the $600 a week payments program, or the stimulus bill, there were a lot of people who were doing fraud with it and finding ways to get multiple checks, etc. A lot of the money was paid out to fraudulent activity. Right? That's natural, because you can't track a dollar. Cash can't be tracked, but you can track all this digital currency directly to the wallet you deposit it to. Right? I'm not saying it's going to eliminate fraud. Obviously, somebody's going to be able to do some fraud there too, but it really kind of protects the system and the integrity of it. Very fascinating that the Fed's finally admitting they've been trying to do something like this. I think it's so they could do future stimulus direct and in a way that's more efficient. All right, keep an eye out on this. This is pretty interesting for the Fed. For some reason, Bitcoin's catching a bit off of it. I don't think the Fed's going to use Bitcoin, but who knows? It could be wrong. Never happens. Never wrong. I'm just kidding. In Asia, Japan's up 0.2%. Hong Kong is down 0.2. China down a lot, down over 1%, 1.2. India down 1.1 in the morning session. All right. The reason Asian markets were down, and it pushed the it pushed the whole market down, both China, both Europe, and also the U.S. this morning, is this. There was a weakness in domestic consumption. All right. GDP failed to shake off some of the coronavirus damage that's happened. And overnight, we also saw the 7th straight monthly drop of retail sales in China. It slipped 1.1% in July. All right, this is a year-over-year comparison, but it was worse than a predicted 0.1% rise. All right, industrial output went up 4.8% in China, but it missed the expectation of 5.1%. And it's kind of suggesting that this recovery is a little bit fragile at this point in China. And that kind of led to some offloading of risk on assets overnight in all markets, in all complexes. Okay, this morning, sorry, Okay, concentrate day. In Europe today at midday, London's down 2%, Paris down 1.8, Frankfurt down 1.2. So the selling accelerated in the transition from the Asian to the European market. And this morning the S&P, we've recovered a lot of these losses, but Dow was down 0.5%. S&P was down 0.4, Nasdaq down 0.2%. S&P futures now kind of rallied and tagged their prior day close on retail sales data out of the U.S. And we'll go into that in a second. All right, crude oil is down 0.6%. Gold's down another 0.7%. And as we mentioned, Bitcoin's up 3%. Okay, this morning the big news was retail sales, and it was big news indeed. Okay, retail sales were expected at 1.9%. Okay, the previous reading was 8.4. It was actually 7.5%, but then they revised it to 8.4 this month, so it's an upward revision. That's kind of bullish for the market. So the prior was revised higher to 8.4. The expectation was just 1.9, because remember, a lot of these retail sales have already come back as the coronavirus situation unopened or businesses opened. Now it's slowed down because this is the real test. Will consumption continue? Will people continue to spend money? So far, the month-to-month retail sales say no, is down 1.2%. Okay, so it missed. That wasn't a good report, but there were good things here. If you exclude auto sales, okay, it shoots up to 1.9%. So retail sales, if you exclude auto, it hit the mark and it was a really positive number. If you include auto sales, it was a drop. Obviously, auto sales haven't done well. People aren't out here buying automobiles and locking themselves in 5-year, 7-year. I think I saw a 10-year auto loan as well. At that point, it's like it's a mortgage almost on an automobile. All right, there's a lot more used vehicles being turned over, etc. So the car market side of it, strip that away though, it's not too bad. The U.S. retail control account was up 0.4% versus 0.8. That's what the Fed uses to gauge retail sales. And then there's some components for GDP as well. They all beat. Labor cost preliminary was up, and productivity was up huge as well, 7% versus 1.5%. But the high impact number missed. It was just offset by all the constituents of this report, in addition to a back month revision. That's makes it sort of a positive. So really weak U.S. retail sales sent markets lower, and really weak China retail sales sent the markets lower, and then decent U.S. retail sales underneath the hood sent it higher this morning. Okay, where was the spending on the retail sales front? Electronics, remote learning, and home office. That's obvious. And I'm wondering what percentage of those expenses are employer assisted and expenses that, you buy electronics, you buy a home printer, home office setup. What percentage of that was covered and offset by employers? And if that's the case, that's not really retail spending, right? That's corporate spending to provide for a home environment, for an office, for the employees. So I found that interesting. Okay, so if you look under the hood and you strip that fact out, that was the strongest part of the sector. Let's see what that's like next month when people have been working from home. A lot of companies are now, especially the banks here in Canada, have decided to not open doors until 2021, the corporate head office, of like April at this point. All right, so people are still worried about this. Another driver was clothing. That was an interesting one that I saw. And that, now with the 600 government stimulus program over, it's interesting to see the next month. I think the market takes this and rallies a little bit off the news, but in the long term, I think the next few months are the most important, all right, especially with the absence of the $600 a month paycheck program. Other things in the news is this productivity costs and industrial production came out. These are I got to explain them to you. Industrial production came out was expected at 3%. Oh, that's coming out in 2 minutes. Hasn't even come out yet. Bit of a crazy one. What you're looking for industrial production is expectation of 3%, and that's a high impact one. Watch out for that. That could impact markets prior to the open. So if you're here listening to this update, you got 2 minutes before this comes out. Expectation of 3%, and capacity utilization, which is really important, is also up at 70.3 expected. Keep an eye out for that. 10 a.m. business inventories and consumer sentiment, and Fed's Kaplan's going to speak. And then 1 p.m. Baker Hughes rig count, and that caps the week. There isn't any big economic events. Today I'm going to get on it early, try to take a couple trades, get the profit of the book, and be done early as well. There's no reason to be trading till 4 p.m. on a Friday unless you're down and you're trying to make money back, and that's not a good reason to be even trading. So I love you guys. Be careful. Have a great weekend. But you guys check out our community at TradeProAcademy.com. All right, you literally have a 14-day money back guarantee. You know, you're protected. It's the only risk-free investment you're going to make in the markets. All right, join a community of professional traders where we trade every morning, and we're going to right now in the trading room. So YouTube, bid you farewell. Have a great weekend. I'll see you guys on Monday. Take care, and I wish you all the best. Be careful, be safe, but have fun. Take care, and goodbye, YouTube. All right, let's pass this over to our oil desk here and get some oil levels hashed out, and then we'll get some S&P levels hashed out as well. Plan our next best trades, and we're gonna let it rip on the open. Oh yeah, that's a very, very good point. Well, I'll do oil since our oil desk is taking a break, and then we send it over to you, Vicky.